Okay, it's time for our spotlight on mega cap tech. So glad Dan Ives is able to be with us, Managing Director, Equity Research, Wedbush Securities. Dan Ives, Happy New Year. Thank you for being on the show.
You
because
too.
We've already seen so many layoffs. I was looking at some stats yesterday, 150,000 roughly in layoffs. Last year, 25,000 for tech. This year so far in the first 15 days. What's going on? Because I saw in your note, you said how Microsoft had a massive hiring. I mean, they hired 75,000 workers. So is this layoff bad news, or it's okay because that's what they need to do?
Look, I mean, a lot of tech companies, they've been hiring like 1980s rock stars the last 4 or 5 years. And if you look, Microsoft hired 75,000 since 2019. So you're really starting to see the Cinderella story end in terms of hypergrowth, given the macro. And now from Salesforce to Microsoft to Apple to others, you're seeing cuts. But the street wants to see that to preserve margins. And ultimately, what I view is starting the next growth cycle, once we get through this dark storm.
Yeah, there's been a concern about the slowdown in the software business. Is this just some cost cutting and just being cautious? They've been spending a lot. You mentioned like 80s rock stars. They've had M&A activity. Of course, the Activision story is still looming. Tell me your thoughts on that. And of course, I just heard it like about a month ago, Chat GPT, and then I haven't stopped hearing it. I mean, it sounds like the next best thing since sliced bread. What's going on?
Look, Nadella is going to stay in the left lane of innovation. They're going to continue to double down on cloud, artificial intelligence. You look at Chat GPT, that's a significant bet. And we love that poker move in terms of as it plays out, because this is not the time for Microsoft to slow down innovation, but they're going to cut in non-strategic areas. But even when you look at cloud growth, we still see it above 30% line in the sand this year in a 2 to 3% spending environment. Look, Nicole, right now, I mean, it's very easy to yell fire into a crowded theater in terms of the bears. We just view this as a name that has massive risk reward that we be owning here.
Yeah. It was the hyper-growth decade. That's how you described it for tech. And I see why they're doing these layoffs and such. Is it over, or should we expect more? Are there more shoes to drop for Microsoft or any of these other names?
Yeah, I could definitely see another 5 to 10% cuts across tech. From the large stalwarts down to specialized companies struggling in terms of capital and really trying to, I think, navigate not just competition, but a tougher macro that we're seeing globally. But you're going to have winners and losers that come out of this. And I believe the strong get stronger. I look at Microsoft, you look at Amazon, you look at names like Apple. This is not the end of tech's dominance. I just view this as sort of a resetting of expectations, just given what we see in terms of a, call it Category 5 storm clouds, at least near term in 2023.
Yeah, I mean, Amazon with more than 18,000 in layoffs, that's their planned reduction. That's the largest ever in its 28-year history. I mean, it sounds a little scary just because people don't like to hear that. And the question, too, is as technology improves, they don't really need all these people, and they never will again, probably.
Look, you raise great points, but I think it's also in context, too. I mean, Microsoft hired 75,000 since 2019. They're laying off 10,000. You look at, I think ultimately as these big tech companies lay off, other well-funded companies, startups to others, they're going to be able to get these developers and engineers. So I view it as still, it is an arms race to get software developers and engineers, but it just shows, I mean, the clock struck midnight in hypergrowth. These tech companies now have to react. Yeah. I view it as a rip the Band-Aid off moment.
Yeah, all right. I mean, it was Coinbase, Meta, Rivian, Lyft, PayPal, Peloton, Netflix, Stripe, Twilio, Salesforce, Cisco, Shopify, you know what I'm saying. Okay, let's get to, those are all the companies that did some layoffs. How about Apple? You have a 175 target down from 200, still a big believer, and how quickly can we go? And that's your base case. Do you have a bull case?
Look, base case 175, but if you look, demand's holding up well. And I think going into Feb second earnings, a lot of bad news priced in. And I think iPhone demand right now, going throughout the year, I think we've not seen any sort of major cuts in Asia. That's important because obviously they had supply chain issues, but I think Apple is going to be a pillar of strength in this storm. It's not time to throw in the towel. I think there's a stock that's a lot closer to 200 than 100 at year end.
And Procter & Gamble was saying how, and I'm not comparing the tech stocks to Procter & Gamble, but the story is about Russia, Ukraine, China. All of these things sort of dented the numbers, and that probably is the same for a lot of these big companies like Apple. How about Tesla? You have a 175 price target. What's the narrative here? I mean, do we love Elon Musk still, or are we tired of him? Now he's obviously front and center, still dealing with the "I secured funding for Tesla" tweet way back when.
Yeah, look, I mean, we've talked about that noise that we believe took off, at a minimum $60 to $70 on the stock. But now cutting prices, that's a strategic poker move that we love. I think volume is going to increase going in 2023 based on where the street was even a few weeks ago. And I think the China story on those price cuts, I think that could really start to recover. And I view Tesla as, in our opinion, along with Apple, most transformational companies in the market, period. Musk, you're starting to see maybe a different tone so far that we've seen over the last month. And that's also why the stock's up significantly from its lows, despite what's clearly some demand issues starting to, that they're facing globally.
And I have bears that come on and say, look, Tesla was Tesla, but now they're losing market share. The competition has been increasing. It's not the same game anymore. The stock is so heavily overvalued, particularly when you look at other automakers, which Tesla is more than just an automaker. But even seeing its fair value closer to $22 than $200. What do you say to those naysayers?
I think if they're NFL scouts, they would have been negative on Tom Brady coming out 6th round out of the Michigan, right? I mean, the point is, like, they hate it at 10 billion, hate it at $1 trillion. They're going to hate it at 400 billion. I just view it as, this is not an auto company. It's a transformative, disruptive tech company. And obviously, a lot of this has sort of been Musk Twitter driven the last year. But I believe now you start to see a much different narrative in 2023. But look, the haters are going to continue to hate in Tesla.
Yeah. That was Brady's worst playoff game as far as stats, like, ever, right? I think. I don't know.
But he's still the GOAT. I was looking
at all his stats, and he was amazing. He was the GOAT, right? Does he retire now? Just quickly, I'm wondering.
No, I think he stays on. I think he stays on another year. And we'll see. And also, congrats on the new congrats on the new studio there.
Oh, thanks, Dan. I can't wait for you to come and see it. Thank you, Dan Ives. Always wonderful to see you. Managing Director, Equity Research, Wedbush Securities.